Hey, good evening, everybody. Welcome out to tonight's weekly training webinar for all of the members of Tax Sale Support. We appreciate you joining us. I'm Ferre, and I'm sitting here with Stephen Swenson as always.
Yeah, exactly. Excited to be here, and of course we do these each week, and try to tackle a different topic each week. And today we're going to be talking about, reading tax sale list and how to review them, and bracketing tax liens and deeds.
Yeah, which these are all tools that I think you basically have to utilize in order to get through tax sale lists, but they're also things that can help you get through them faster.
Yeah, absolutely. One of the most important things we have as investors is our time. And, some of these tax sale lists, if you're looking at lien lists or, different types of even deed lists, there could be literally hundreds, if not thousands of properties on the list.
Yeah, it's really easy to waste time looking at properties that may not necessarily work for you as investments.
Yeah, exactly. And so by, one strategy that we've developed and used is what we call the quick glance method, where we're actually going through and, reviewing tax sale lists and really kind of doing a scan of it, and through the information on the list, deciding what properties we want to do some further due diligence on.
Yeah, and really it's a matter of trying to find something that we can use as a criteria. Some kind of some aspect of the property that we can use as a criteria. So a lot of times it ends up being something like the price, but it wouldn't necessarily have to be. Anything that tells us something about the property can tell us a little bit about it.
Yeah, exactly. There's really kind of three main things that we're focusing on when we're reviewing a list and using the quick glance method. And if there's additional things on the list, that only makes it that much easier. We just kind of put down the three basic ones, or the three ones. So if there was something like, structure, non-structure, or acreage, or any of those other things, that could help us make a decision that much easier. But the main ones are going to be kind of the minimum bid, assessed value, and then also the address.
Yeah, and this is because these are the most common bit of information that counties provide. At the very least, in most cases, we can at least get a minimum bid amount. Sometimes we can get an assessed value. Sometimes we get more. Sometimes we get less. But we can always utilize it, just with something as simple as a minimum bid amount.
Yeah, well, and some of them will only have a minimum bid amount and a parcel number, but if they have the minimum bid amount and that assessed value, then using those together, we can kind of just figure out what the property is, or what the bid to value or the lien to value ratio is.
Yeah, we can determine a lien to value ratio really quickly if we have both of those at the same time. If not, then we just kind of have to go off of the minimum bid. But at the same time, though, even a minimum bid we know is going to be, in a way, reflective of the property value.
Yeah, exactly. Well, and kind of depending upon the area, we can have that, we'll know to a pretty good degree. Like in some tax deed states, I know within that state, most properties are going to start between 8 to 12% of the assessed value. Or in lien states, I know that within this lien state, really the liens are only about 1% of the assessed value. So I'm looking at $1,000 lien, I could really be looking at $100,000 property.
Yeah, and what you'll find is generally from property to property, in that range, they're all going to be, valued similarly.
Yeah. The county's going to do the assessment. So regardless if it's on a building lot or even something like a home, they're going to be doing the assessments similar on all the homes or building lots within that area.
Yeah. So I think when it comes to the list, we really are forced to work with what we are given. In a way, it's something where you're forced to deal with what the county provides, but that information is enough in most cases.
Yeah. When we're looking at a tax sale list, and we talked about this a little bit before, there's going to be, every list is going to have different information. And so what we're going to be doing is, based on our objectives, how much money we have to invest, we're going to be applying that information of what our objectives are as we research the list.
So the idea here is to find a criteria that we can set or use to narrow down our list of potential investments. It is a process of weeding out, those that won't work, so that we can focus on those that will. You know, it's a process where we are constantly narrowing down our potential investments.
Yeah, well, let's say we only have $10,000 to invest. Well, we're not going to spend any time researching properties that have an opening bid of over $10,000.
Yeah,
You know,
exactly. It doesn't make any sense to look at higher price investments if it's beyond what you want to spend or what you can spend.
Yeah, so like we talked about, the first thing we're going to look at is the minimum bid or the lien amount. And so with the minimum bid, that could be, a tax deed is where the minimum bid is going to start out, or it could be the lien amount as far as how much we have to pay to buy that tax lien certificate.
Yeah, they should be, for the most part, though, equal across the board, whereas, where property values are reflective by that minimum bid amount. The only exception to that where property value isn't reflective of the minimum bid or lien amount is if you get some situation where you have more than a single year's worth of taxes owed.
Yeah, that's a good point. Well, and part of the reason we're going to be looking at the minimum bid amount is, like we talked about, we don't want to spend time researching liens that, are above our lien amount, or liens or deeds that we can't afford. It's going to be based on our budget. So if we're going through a tax sale list, and let's say we have $5,000 to invest, then we're going to use that minimum bid amount. Let's say we have $5,000 in the tax deed auction. We're going to use that minimum bid amount to determine which deeds we're going to research.
Yeah, it's really easy to eliminate everything that sits above a set price level. That's something that we do almost naturally when we're just looking at list of potential things to buy.
Yeah, exactly. So if an investor has $10,000 to invest, like we mentioned, they're going to use that and look for deeds that fit within that. So if I had $10,000 to invest, or we may look at deeds that go all the way up to $10,000, because if we could get it near the minimum bid, so maybe we'd look at needs that would top out, if we were to do that, if that was our strategy, at maybe 9,000.
Mm-hmm.
Something around there, because if we could afford that property and it was a good property, then it would make sense. But that's part of the things that we're going to be looking at as well when we're investing is, do we looking for to put that $10,000 into one property, or do we want to put it into two properties?
Yeah. Something else that we may do is, we may also set a minimum amount or a low amount. Now, that might not necessarily always make sense because, again, we could possibly buy properties that are lower priced. But what we may do is we may end up setting a certain threshold. We don't look at properties below a set value because we're trying to focus on a certain type and quality of property.
Well, and that could really be important in something like a lien sale, because, with some of these online auctions, let's say we're looking at a Florida lien sale, there could be 10,000 tax liens. There's no way you're going to be able to go through those 10,000 tax liens and determine which ones are going to be good investments within that county. And so by setting the minimum amount, whether that be, let's say we were looking for tax liens between $500 to $1,000, we would at least eliminate that 10,000 down to maybe 500 or 300 or 200.
Yeah, you're not going to get the stuff that's worthless, because you're sticking with that bottom amount of $500 liens and above.
Yeah.
The problem with when you get liens that are down below $500 is, a lot of them are properties that still redeem and everything's fine with them, but you also get a lot of properties down in that price range that are junk, kind of useless land that doesn't really have value, or not really worth foreclosing on. So it's hard to take, not something you'd want to take action on necessarily, even if you were to buy a lien against it.
Well, and that's where, really kind of depending on the state, if we are looking at liens, can make a big difference. Because, if I let's say we're investing in a state like Arizona, where I've got to pay, or you've got to pay an attorney to do the foreclosure. Well, buying a $100, $200 lien on a $5,000 lot doesn't make a lot of sense.
No,
because it may cost $2,000 to do the foreclosure, but buying that or foreclosing on that same $5,000, $6,000 lot in Florida, where we have to pay, maybe we're paying a total of $600 in roll up or something like that, and the county's going to do the foreclosure and put it to a deed sale where we know it'll sell, then that would be a different way that we could look at
it. Yeah, that can become a big factor. The assessed value is always if we can see the assessed value, it's always one of the primary things that we use.
Oh, yeah, yeah. And if you can see that bid, the opening bid amount or the lien amount versus the assessed value, then as we're scanning that list, it's very easy to eliminate property because we can see how much is the minimum bid or the bid amount versus the property assessed value. So, is it 10 cents on the dollar? Is it 20 cents on the dollar? Is it, if we're looking at a tax lien, is it 1 or 2 cents of the property's value?
Yeah, and therefore, if we're looking through a list, we'll see, we'll see anomalies. We'll see when there's something weird about, about a property where there's more money that's owed than maybe most properties, like, in that range have. And sure enough, we'll look at the property and it'll be something weird where maybe the person's been delinquent for a long time, and but they've been paying it off too at the same time.
Or something even like a homestead property, where you're going through and looking on a Florida list, and most of them are starting around 10 cents on the dollar, and then suddenly there's one that's 50 cents on the dollar.
Yeah.
That's because of something like a homestead exemption. And so that's part of the reason why. But we're going to use that assessed value, and that assessed value isn't always going to be what the market value is. We're using it as an indication of market value.
Yeah, really, more than anything, it's an indication that there's good market value there. And not only that, but the higher it goes, the more the chances are that the market value, that there is some kind of legitimate market value there to it. Because again, the county's going to assign value to everything within there. What we're looking for is just the nicest stuff. So in this case, we can see the appraised values of the properties, and I think we can also see.
Well, and that appraised value is just the county saying assessed value.
Yeah.
They're set in that area where this was, they call it a property appraiser. And so they have the appraised value there, but there we can see 79,000, 178,000, 99,000. Well, looking in that list, we know each one, all three of those properties at least have value. We can see that they have an address, or at least we can see on number 2, because it's not covered, it's on Baker's Cove. And then, and we can see what city as well. So in looking at that, we can say, okay, well, that property has a $178,000 value. Here's the address. We could look up the address, and then we have the parcel number there if we wanted to do more due diligence.
Yeah, which would really be about as much as we would need to get some basic information about the property and to have a pretty good idea of what its value is. A property address is another big factor if we're looking through a list. In some cases, it can be an indication of property with improvements but also if you're looking for vacant land, it can also be an indication of what you're trying to avoid.
Yeah, well, and if we are looking at vacant land, it could have an actual address. It could have a street address that help us in finding that property as well. But as we're going through a tax sale list, sometimes if the property address is on there, and easy to copy and paste, we'll take a look at the address on something like Google before we'll actually pull up the property records.
Yeah, because it's faster.
Quicker. Yeah,
it's really the fastest way to be able to see what the property is quickly.
Yeah, so we can at least say, hey, this, if it's a structure or something with it before we get into the county records, which may not, probably won't have pictures, and just have information. We want to get a quick look. Is this even something that we want to look more into? And that's where having the address there, and that can also let us know. Sometimes the address will help determine if it's structure or non-structure.
Yeah.
In some counties, some counties will have addresses on all the property, even if it's vacant land. As long as it has a street address and was a improved lot. Other areas will only have addresses if the property has a structure within the property.
Yeah, and sometimes they'll show that up as incomplete addresses. So the address will be up there. It'll just look incomplete, without a street number maybe or something like that. But it is a good way to be able to identify properties, and at the same time, also a fast way to be able to pull them up using mapping. We copy and paste stuff all the time.
Yeah. Now this list is actually pretty simple. and usually we like to get as much information as we can, but it's dependent upon the county list. So this information, we only have the parcel number, we have the street address, we have the minimum bid. So on this one, we're going to have to really use that minimum bid as an indication, in also along with the property address, see, okay, this one has a full address, has a higher opening bid, so it could be a structured property, versus one that doesn't have, just on 0, Old Samish Road, that's most likely a lot and doesn't have a structure on the property.
Yeah. So basically what we would do in this case, if we were going to implement the quick glance method here, is we would eliminate everything above a set price. And so, let's say if we were set that above 5,000, we could eliminate everything listed here above 5,000, and we might eliminate things that are priced below a certain amount, maybe $500. And just doing those two things alone would probably automatically take out about half of the properties that are there pretty quickly.
Yeah, well, in every list, where this is really going to come into place is especially as you're looking at bigger and bigger lists.
Yeah.
If we're looking at 15 or 20 properties, it's not really worth looking at every property on the list.
Yeah.
Even if it starts at a low bid amount, just to see, hey, is there an opportunity here? But when you're getting into bigger and bigger lists, like sometimes, this has happened when we were helping one of the coaching students that was buying some property in California a while ago, and remember there was 2,000 properties for sale.
It was a humongous list.
And that's really how we had to use the quick glance method to eliminate the properties. And if it's an Excel list like this, we'll eliminate categories that we don't need, and we'll actually kind of customize the list even before we start using the quick glance method to make it that much easier, taking anything we don't need, because some lists will have a bunch of information, like the legal description, which, it's not going to be important. It's going to have a lot, they could be very big.
Yeah, it takes
up a lot of room.
Takes up a lot of space, but it doesn't really provide us with a lot of information, and it keeps some of the more relevant information away. So we'll erase some of the stuff that's not as relevant and focus on the stuff that is. But yeah, customizing the list can make it a lot easier to work through. So yeah, in this case, if we were to if you were to go through and eliminate the legal description there, in some cases you need that information, but also it allows you to get the information there a little bit easier to read and faster, so you can see what the minimum bid amount is.
Yeah, so with this list, we can see the minimum bid amount, we can see the site address, we can see the assessed value, we can also see the acreage. So at this particular county, they're all a little bit bigger lots, but we can see which ones that look like they could be structures. This one right here, where it says bare land, we know that that's land. Property that has 5035 Spirit Lake Highway, that very well could be a structured property, or the 11 Craig Drive. But looking at the bid to value ratio on that 116 Craig Drive property, we're looking at a $339,000 value versus a $9,000 or $9,100 opening bid amount.
Yeah.
So, we're looking at what, 8%? My math's never good, but 8% of the maybe less than that.
Yeah, probably even
7%.
less than that. Yeah, it's excellent in terms of the numbers.
7.5% or something of the bid to value ratio.
Oops, sorry, did that on accident there. Yeah, the lists. This list I think is pretty typical of what we see. Fortunately, the lists are getting better, and one of the things that's nice is that we're seeing more and more lists that are online and that are completely linked up to county records, to everything we need. So that saves us a ton of time.
Yeah, absolutely. Well, in some of these bigger lists, like something in in Florida or some those type of lien sales, we'll have online systems that make it a lot easier. But if you are doing something like a California bid for assets auction that has 400 properties on it, trying to go through and look at each one of those properties using the bid for assets online search takes a ton of time.
Yeah, it can
and
really
so
be a
really,
challenge.
the best way to do it is to go ahead and download that Excel list and really kind of use that quick glance method so that you eliminate properties, so that suddenly take that 400 down to maybe 50 or 20 that you want to research.
Yeah, it's all about getting it down to more manageable numbers, that you can you can work with and not spending all of your time to do it. When it comes to investment bracket systems, this is again a way that you can try to estimate or calculate property values and also help to estimate your bids.
Yeah. As far as the investment brackets, these are really just tax lien and tax deed brackets that we've tried to categorize the type of properties you can find within these brackets, and also the type of values that are within these brackets as well. Now, every state is going to be a little bit different, so we've kind of generalized this, but this at least gives you an idea as you're going out there and getting started with how much money you have to invest, what type of properties are you going to be able to compete with, or what type of properties are going to be in that type of price bracket.
Yeah.
So the first thing we're going to bracket when we're bracketing tax liens is really the minimum bid or the lien amount versus the assessed value, because really that lien amount is a reflection.
Yeah, and it's also the most common thing that we're going to use there. It's also how we kind of determine the overall security of the investment. So if we can get those two numbers, we can generally determine if it's going to be a good deal or not.
Yeah, well, and a tax lien, and what makes it different between a tax deed is a tax lien only represents a single year's worth of delinquent taxes.
Yeah.
So when we're looking at a tax lien, we're not looking at any roll-up or anything like that to begin with. We're just looking essentially at 1 year's worth of back taxes versus the property's assessed value. And so usually, that should be, we say around 1-2%, maybe a little bit higher than that, 3% and 2.5% in some areas. It could be even lower than that. But when we're looking at that minimum bid or that lien amount versus that assessed value, we want to make sure that that it's really is pennies on the dollar.
Yeah. In other words, if everything we're looking at, all the liens are sitting at about 2%, lien to value ratio, and suddenly you see one that's 8 or 9%, it's not going to slip past you. It's going to seem abnormal, and so for that, you'll search into it more. I think if you're just doing basic research, you'll be able to identify them. And sure enough, if you pull it up, you'll find that the reason why there's additional taxes owed. But that's one of the nice things about tax lien sales and buying liens is that normally it's just a year's worth of delinquent taxes.
Yeah. That lien amount, that minimum amount should always be a reflection, of 1 year's worth of property taxes. So like Shade makes a good point. If we do see it and it's 8, 9, 10% of the property's value, there's a serious problem within whatever that lien is, because usually it should be a small amount.
Yeah, but it makes it easier to avoid problems too, because the more research you do, the more they start to stick out like a sore thumb.
Yeah, well, and also is the amount of the lien goes up, that really is correlating to the assessed value. A $500 lien is going to be, a $1,000 lien is going to be more valuable than a $500 lien as far as the property that's attached to it.
Yeah, and that's almost always going to be the case.
Yeah.
So when you are investing into liens, one of the things you've got to determine here is how much you want to invest, and once you determine that, you can set part of your brackets there. So you can set a bottom dollar amount here with your bracket, depending on what your objectives are. But to kind of show you an example here, so in bracket 1 here, we would say is the more inexpensive tax liens. These are tax liens that start off from the cheapest you're going to find up into maybe a $500 range. And they generally tend to represent properties that have values ranging from low couple $1,000s up to maybe 20, 25,000.
Yeah. Now, when we're putting the property types here, these are the good type of properties you can find within this group, because within this $10 to $500 range, this is actually where a ton of the junk properties are going to be. But that doesn't mean that there's not great tax lien certificates. We've seen, in fact, we're helping some of the coaching students today buy some liens that were, around $400 to $800 that were on single family homes. So it kind of depends a little bit, but we're looking at, lower dollar value homes in areas where maybe the property values are 30,000, mobile homes. but really a lot of land and lots and things like that.
Yeah. In the next bracket up in price range, so between $500 to $1,000, or in that range, you'll start to get properties with assessed values ranging between 25,000 to 50 or 60,000.
Yeah, yeah, and so this is where we'll get into more of those things like condominiums, single-family homes, you know, higher value residential lots or building lots. In fact, this is where a lot of investors will start, is kind of within that $500 to $1,000 range when first getting started with tax liens.
Yeah, well, you can buy good liens that have great value. You know, they're placed against properties with significant value. I mean, there are fantastic liens, you know, in this price range that are, you know, well worth foreclosing on. Really, even in bracket 1, there's lots of liens there.
Yeah,
Great property.
Really, between bracket 1 and bracket 2, you can really, if you were a lien investor, you really could just focus on those 2 brackets if you wanted to, and still get good tax liens on good investments that have value, you know.
And higher chances of foreclosing eventually.
And a higher interest rate, because as the property value goes up, sometimes the interest rates can come down. You know, as the property gets more valuable and you have some higher dollar investors that are trying to put larger amounts of capital away, they're willing to accept a lower interest rate than, say, an investor. Like an investor who has $10,000 to invest is going to want to get the best interest rate versus maybe somebody who has 200,000 or 300,000 or $1 million and are willing to take a 9% return, while you, being a smaller investor, want to take a 14% return.
Yeah. So it's a great price range though for liens, and they're liens that are always, all of these liens are highly likely to redeem, and the more valuable they get, the more likely they are, you know, to end up in redemption.
Yeah, bracket number 3, these are liens that range around $1,000 up to around $2,500. The assessed value on these usually range from about 50 to 150.
Yeah, and these can be anything from nice single-family homes. You know, it could be luxury condos, or you know, this is where commercial property will start coming up, and also multifamily.
Yeah, this is kind of that beginning range where you're starting to see, like Shade said, commercial properties. And we're not just talking about commercial land here, we're talking about, you know, commercial buildings as well, and also something like duplexes, triplexes.
Yeah, which everything here is going to be nice. And as it works its way up, you're going to get into kind of the higher priced liens, which again, all have very high probability of, you know, resulting in foreclosure. They pretty much, I mean, resulting in redemption.
Yeah.
Because you've got such valuable property.
Yeah, usually investors will pay these off before going to foreclosure, like Shade said. But these will range from $2,500 to $5,000. You know, the assessed value can range from around 100,000 up to $250,000 plus. And of course, we have, you know, the homes and condos and things like that in here, but we're also going to include things like commercial condos, commercial real estate, you know, large tracts of land.
Yeah, large tracts of land can really be in all, you know, in all the bigger categories. You can find big chunks of land sometimes for sale.
Yeah, exactly. You know, even like, you know, one of our coaching students who bought,
Dan.
Yeah, Dan. I was just gonna say, Dan who bought, you know, 27 acres. That wasn't within a deed, but that would fit within that price range of being a higher value piece of land.
Yeah. And for bracket 5, we've got, you know, liens between 5,000 to 10,000, and generally assessed values of 200 to 500,000. You know, generally custom homes, more commercial properties. You know, just nicer commercial properties.
Yeah, you'll start getting into apartment buildings here. Different types of, you know, smaller apartment buildings, you know, duplexes, triplexes, eightplexes.
Bigger chunks of land.
Yeah, bigger commercial properties as well. And for, you know, number 6, these are the high dollar tax liens. You know, they can range from 10,000 to 100, 200, 300,000.
Yeah.
You know, we've seen massive tax liens, you know, that could be on huge properties before different tax sales, but these are going to be the properties that are worth what, $350,000 $1 million plus.
Yeah, Yeah, and with these properties, I think there's a very small percentage of people that show up there at the auction to buy them. These are the kinds of deals, though, the institutional bidders love.
Yeah.
Because they are, one of a very small number of people that might go after that particular deal. You're going to have a fewer number of people competing with you at, properties within bracket 6 than you will at a you will when you're competing at bracket 3.
Yeah, well, in bracket 6, really should, it starts at 10,000, but really that's like bottom line, because, bracket 6 really includes those 20, 30, 40, 50, $60,000 liens.
Yeah.
That could be on property that are worth 3, 4, 5, 6, $7 million.
Yeah. So really, I think there's a ton of opportunity no matter what price range you kind of get into, that you're going to find a lot of great property available.
Yeah, so if you're choosing a bracket, really it's just about going through and reviewing each one of them, deciding which one's going to work out best for you based on how much capital you have, and and based on your time as well.
Yeah, the kind of property you're trying to acquire.
Yeah, some investors will take $10,000 and break that $10,000 up and buy 10 tax liens, so that they can increase it would maybe increase your chances of getting a foreclosure, because you've spread that up over 10 investments, versus taking that $10,000 and putting it into one property where, it's going to take less work, and because you're just following one property, but you're also, decreasing your chances of getting a property.
Yeah, in fact, the amount of time you want to put into it will probably be one of the biggest deciding factors in choosing, which method you're going to go about doing, and how much time or effort, you can put into it. It's always going to be easier, I think. Well, it's always going to be, you can go with nicer properties, but they're going to take more work, more research if you're going to pick out the nicer ones. In other words, if you're going to go with $10,000 property instead of 5 $2,000 properties, you need to put quite a bit more effort into that one $10,000 property, because you can't have it go wrong.
Yeah, well, also those higher brackets are going to be a smaller amount of properties, especially when you're looking at tax liens. Most tax liens are going to range between that 500 to 2,500, mark.
Mm-hmm.
There's only a smaller amount that go above that. Most of your tax liens are going to be within that area. But like we kind of talked about, you can customize your bracket however you want, or you can take your investment and, invest into, one $5,000 tax lien, and two $2,500 tax liens if you had 10 grand. You can do it however you want. And really, it doesn't matter if you're investing into, 20 $500 tax liens or one $10,000 tax lien. As long as the bid to value is good, mm-hmm. your money's protected.
Yeah, they're going to have a high chance of redeeming. Now, the more properties you purchase, I guess the higher your chances would be of foreclosing on one of them eventually. But that also has a downside, because the more properties you purchase, that means the cheaper the value is of the properties overall.
Yeah,
and so you're going to risk
more work as well.
Land. Yeah,
you're going to be doing more work, and there could be fees with each one of those tax liens, and that's where it kind of depends on what your strategy is. If your strategy is primarily for interest rates, then and you found a good tax lien at 10 grand, then it would make sense to put it into one tax lien at 10 grand, and when it redeems, it redeems. If you are looking to get a property, or you want to kind of diversify so that you have more checks coming in at different times, then buying 10 tax liens at $1,000 would, probably flipping, I think there's an example of what we're talking about, that would increase your chances, like you're saying, of getting a property, because you're spreading that out.
Yeah, with 10 liens, you've got a higher chance of acquiring one of those properties, but definitely a lot more work.
Yeah, so Bob here with that 10 grand could do one $10,000 lien, or 2 5 or 4 2,500 down from there.
Yeah. With bracketing with tax deeds, it's a little bit different, but same concept. We're just basically bracketing out the overall price for the property.
Yeah, and when we're doing this is not what the property is going to sell for. This is what the opening bid amount is. So that is what the property could sell for, or it could bid up higher than that. But when we're looking at the bracket system, really kind of what we're looking at is where is the minimum bid going to start.
Yeah. Yeah, and so the first bracket range there for the deeds is going to be the the $10 to $1,000 range. It's kind of the opening range here. And these are going to be properties that are valued anywhere between $1,000 up to as high as 20.
Yeah, and so these can include residential building lots, lot of lots, mobile homes, rural land, large lots, or not large lots, but lots, different things like that. In fact, with our coaching students, we actually, help them get started in this bracket to begin with, getting practice doing deals before going on to the bigger brackets.
Yeah, it's easier to learn when you don't have a humongous amount invested into every transaction that you're doing. It's easier to learn, I think, when you can kind of go through this process and watch it work and watch your money grow, and still do deals and be profitable. But yeah, properties in these ranges, we can definitely do that.
Yeah, so like we've purchased $500 building lots that are valued at around 10 grand. We purchased for around 5 cents on the dollar that would fit within this first bracket.
Yeah, definitely. Now, the next bracket up are the properties that would open up between $1,000 to about $2,500, and they're valued 15 to 50.
Yeah, and this is going to include, of course, we're going to be including some of those lots in there because depending on the area, $15,000, $20,000, $25,000, $30,000 for different types of lots. We can also include commercial lots in there as well. Mobile homes with land can be in here. And then also we're starting to get into, even though we don't have it listed here, it is cheaper homes.
Yeah, inexpensive homes will kind of start right around that range, but a lot of times they're the rough homes.
Well, yeah, and you can get them up to like 2,500. We've seen decent homes start at 2,500, but they're going to probably bid up more than that.
Yeah.
So we do see them start around this thing where you'll start to see low, cheaper, expensive homes like a $40,000, $50,000 home, something like that.
Yeah, it's a great price range though for vacant land, because a lot of times the people that are in the price range, a lot of times are looking for homes, in that price range, and they ignore a lot of the vacant land.
Yeah, that's a good point. If you're going to spend $2,500, or let's say $2,000 on a property, and you put $2,000 into a home, you're going to get a pretty junky home.
Yeah.
Probably something. But if you put that $2,000 within a lot, chances are as well that the homes, if it is have any condition, is going to bid above that, but the land doesn't have as much competition. So where homes, you may have to spend between 20 to 50 cents on the dollar, depending on the area. Land, you can get between 5 to 20 cents on the dollar.
Yeah, dollar for dollar, it's generally going to be more profitable. And the next bracket up from there is our tax deeds that begin between $2,500 to $5,000 and would have an assessed value of about 35 to 80.
Yeah, that's probably pretty close. These are going to be, of course, your single family homes, kind of your starter homes type of thing, mobile homes with land, nice. These are, when we're talking about lots as well, these are going to be higher quality building lots. These aren't going to be your small rural building lot kind of out in the middle of nowhere. These are going to be improved.
Improved in neighborhoods with homes that could be valued at 100,000.
Oh yeah. In these type of building lots or homes that are probably 250,000 to 300,000. Even just kind of like that picture building lot up there above.
Yeah, you can kind of see the new house next to it.
The newer home. We've actually purchased some building lots like this in the past where we were able to get them for pretty good values.
Yeah.
Through over-the-counter sales and stuff.
Yeah, but they're very attractive, and they also move pretty well. They move pretty well because there's a limited number of building opportunities in areas like that.
One thing to mention as well that we've talked about is we talked about wholesale a lot versus in some of the other webinars, wholesale versus going through and getting quiet title. This is kind of where you're going to start looking at doing quiet title on property versus just wholesaling it.
Yeah, you could definitely find property that would be valuable enough here in this range to make it worth going through quiet title.
Yeah, so essentially what we're talking about is going through the process to get a warranty deed so that you could get financing on it and list it with an agent and everything else. So, you know, at that point, this is where we'll start looking into having that done.
As they go up from here, we're looking at the 5,000 to 10,000 range, 50 to 100,000 in value. This is where a lot of single-family homes, condos, different parts of the country, and also large tracts of land.
Yeah, definitely. You know, more valuable land. In fact, this is, well, I guess it kind of be the next one that would be closer to the land that we were talking about with Dan. But
commercial will start about here, though.
Yeah, commercial properties, and especially as we get up here into the 10 to 15,000. You know, this is where we're going to get into, you know, nicer luxury condos, commercial property, larger tracts of land, and even getting into things like duplexes, triplexes, sixplexes, you know.
Yeah. And the next range up would be the tax deeds that begin at 15,000 plus, you know, and on up, and have assessed values of 100,000 and up, basically.
Yeah, and really that could, you know, you can go from 50,000 up to 150, you know, because we see such a wide range of properties that come up for sale. I mean, you know, even just this last month, we on some of the videos that we put out on YouTube for the deals of the week, there was, you know, single family home valued at 1.7 million. There was the Inn, was it Days Inn?
Oh yeah, there's a Days Inn for sale.
Days Inn, you know, a newer Days, I say newer, but at least I'd say within the last 20 or 30 years.
And a bowling alley.
And there was a, you know, a dollar store, and all of these are $1 million plus properties where, you know, it's going to start at a higher bid amount, but they're huge profitability on them.
Yeah, some awesome properties. And so, yeah, when we're looking at deeds, though, we generally try to buy deeds. Well, we want the opening bid amount to be as close to about 10 cents on the dollar as we can find. That's usually a number that if we, well, anytime we can pick up property for about 10 cents on the dollar, it's usually a pretty good deal.
Yeah, and sometimes you'll acquire that property at a minimum bid amount or slightly over the minimum bid amount. Maybe there's a couple of bidders, and then sometimes that'll bid up, you know, higher than you ever want to pay for the property. But that opening bid amount is you know, usually kind of based on what we've shown, is kind of going to give you an idea of where that opening bid amount is going to start usually.
Yeah. So really, we want to go through and let's see here, depending on how much time we've got here.
We can go through and do a quick glance real quick.
Yeah, let's take a look at a list here and let's kind of show how we'd go out and do that.
In fact, it might be worth looking at, you know, one of the California auctions, because they'll usually have some pretty good lists that we can use.
All right, so let's do that here. Oh, I'm on the wrong one here. Let me pull this. Yeah, we were looking at some sales earlier that are coming up here in California. Actually, oh, wrong one again. There we go, county tax sales here. And yeah, the ones we were actually looking at, there are some good opportunities in a lot of these different sales here. But one that's got a little bit bigger list that we could at least look at for kind of a quick glance method would work is for this one, you know, this Calaveras County.
Yeah, so, you know, when we're getting a list like this, how many properties are in this?
79.
So we're not looking at a massive list, but trying to go through, at least on Bid for Assets, and look at each one of these properties. They have them kind of in these folders, and then you've got to click on the folder and click on each property. So, you know, you've got to, you know, each property you've got to click on and go back, and it takes quite a bit of process. So for you to go through and look at every one of those 79 properties, even if you're just spending a minute on each one, it's going to take you quite a bit of time.
Yeah.
And you're going to be looking at a bunch of properties that you have no interest in buying. So the best thing we're going to do in a list like this is go ahead and download the list, which will be within the folders there.
Yeah, in fact, let's grab the list right here. here we go. Okay, so
this list doesn't have a ton of information on it as far as extra information we don't need, but it does have, we could go ahead and take off the auction end time if we wanted. It's 3 p.m. We don't, it won't be too important. We'll be submitting our bids.
Yeah, the rest of it though here.
Yeah, the rest of it's not bad.
Yeah, and we can see, we've got good full parcel numbers. We've got the property address there. So what we might do with a list like this is we would start to bracket the prices, and start trying to use kind of quick glance here to narrow down.
Well, yeah, and it kind of depending on what we want to do. If we wanted to buy structured property,
yeah, we would
just go ahead and erase.
Yeah, eliminate all of everything here that doesn't have improvements.
Yeah, in fact, we'll go, if it's an Excel list like this, we'll go over to the side and actually delete the files, or we'll use kind of the color coordinate, the fill-ins, the color fill-ins, and fill in, the colors. So if it's one we're not interested in, we'll put it in red. If it's one we're interested in, we'll put it in green. If it's a maybe, we'll put it in yellow. And we'll kind of go through the list as we're looking at each one of these and determining. So with this list, we can see the minimum bid amount, we can see the acreage, and we can see improvement and land values. So the ones that have both improvement and land value, we know are going to be some type of structured property, and the ones that don't have anything there aren't going to be.
Yeah, so you already kind of see here, if we were just focusing on the structures, and that was what we were after, we'd be able to eliminate all of this pretty quickly here. And suddenly, I haven't even done up there to see which ones, but it's going to narrow this down pretty dramatically. If we from here start adding in breakdowns we do based on pricing, it's going to narrow that down quite a bit.
Yeah, well, say at this point we've narrowed down, say we have a total of 20,000 to invest.
Mm-hmm.
Or something like that, then we would eliminate those properties that go above that amount.
Yeah. So we could immediately, we would immediately eliminate this one.
Yeah, the $63,000.
Yeah, the 63,000 and the 26 and the 25 we would eliminate, and we might eliminate that 24.
Yeah, or if we did 25, just kind of using the number game, but
yeah, but suddenly we've got about more
5 properties to look at versus looking at 79 properties. And then we can go back to the online list and we will see where it is within the file, so at least it'll make it a little easier.
Yeah, essentially our goal though is to try to spend as little time as possible with this type of work on the list, because this is the easiest place to waste it. So if we can get in and do our research quickly, we want to do that. We try not to get hung up on any specific aspect of it though for too long.
Well, and with this list, because it does take it's a little bit harder to find, as far as the process on bid for assets, we have the address there, so we could go ahead and copy any of the addresses that we were interested in and at least get an idea of what some of these structures are, or the lots or whatever we're looking at, just by quickly doing a Google Maps view, Google search.
Yeah, in fact, we could, it is so fast now. We already know this is in Calaveras County, and
well, they have the city there as well. If we needed it.
San Andreas, and so
you can see kind of the lot there as well.
Yeah,
looks like there's kind of, I guess it's probably a shed.
No, it's a house.
Oh yeah, I meant the other. There's 2 things next to it. That purple thing next to it, I saw it showed up on the.
Yeah.
It's got, look at that tennis courts behind it.
Yeah, it's interesting.
I wonder if that's supposed to be for the area or just that.
I don't know. There's 5 tennis courts though. It's quite a few.
It's a nice home.
Yeah, it is. Yeah, it's a really nice area. But yeah, way faster for us just to grab that and pull it up this way than it is to even do anything else.
Yeah, well, and we can, from there we could also, now we have the address, we could go ahead and look that address on Zillow, get a better idea of its value. They're showing improvement value of 163 and a land value of 28.
Yeah.
So, we would look that up on Zillow and see, hey, is that similar, or what is the market value in here? And then, if it is something we're real interested in, we can do that additional due diligence to determine what it is and, start researching the property values and all of that.
This is like kind of like cabin properties here in Arnold. It's probably a little bit further up here. It kind of looks like cabin stuff.
Yeah, there's a little lake up there.
Oh yeah, there probably is. Probably a little homeowners association up there too. The Lake Mount Pines Homeowners Association. But yeah, so basically what we would do here is look at these. After we've looked at each one of those, we might even highlight these based on what we think. I mean, we might add notes over here on the side.
Yeah, exactly. We'll use these files really, all the way up until the day of the auction, adding notes, going back to them, referring to them.
Yeah. Yeah, the other thing that we use quite a bit is simple comps. We end up looking at comps in an area because, if we're thinking about doing something here, this is in Murphy's, California, then we might go like, we want to get an idea of what's going on there with the market. Hold on, let's try that again, Zillow. There we go.
Yeah, and so with this, we're not, we're just doing a quick view to see if it's a market that we want to invest into. If we're looking at land, we're going to do a quick view to see what the lowest and cheapest land and what's the lowest and cheapest homes available within the area.
Yeah, and we can start kind of pricing them out from there, and so we can see that there are some properties that are listed. They're starting off at $6,000 to $7,000, and then they jump up to about $15,000.
Yeah, you see most of those cheaper ones are in Murphy's. So if you're in a different town, that's where it could make a big difference as well. We're looking here within Murphy's, but Murphy's isn't the whole county. That's just one city.
Yep. Yeah. In fact, which we might look at the entire county if we wanted to get a little bit better idea of surrounding areas.
Yeah, this looks a little bit more kind of mountainous to me. I would bet that the home that we just looked at had a higher value.
Oh yeah, in fact, if we're looking here at Calaveras County, the properties that they've got there are quite a bit different, especially if we weren't looking at value from low to high.
Yeah.
For just the vacant land.
You can kind of see they're down. The cheapest ones are kind of, a lot of them are down there in the corner.
Yeah, you can see they're all over here on this, yeah. And as they work their way up, so in other words, if you've got property over here, they work their way up in value. Yeah.
Yeah, it's definitely important to look at not only this, what the properties in the city are currently for sale for, what's been selling, but then also, county, but then also on a city level. Yeah,
there are some good properties here, but in these sales though coming up, there are still just tons of properties. There's multiple sales in California coming up, sales in Washington. So many different states that we've been looking at here lately with sales that are coming up.
Yeah, in fact, before we go, that actually reminds me of something real quick. We are looking at doing another 3-day event. We had a lot of people request from the East Coast, so we're looking at doing one in Orlando before the end of the year in December 13th, 14th, and 15th. So if you're interested in coming out and attending the 3-day, we just held one. We're looking at a possible date of doing it before the first of the year. We weren't going to think we could do it until after the year, but I think we have enough people that are interested. We might go ahead and hold one in Orlando.
Yeah. So we're at the 13th, 14th, 15th.
Yeah, I believe so.
So yeah, if you guys can make that, or if that's something you'd be interested in attending, getting more information on, let us know, and because we'd be interested to get a head count.
Yeah, absolutely.
Anyhow, hey, thanks for joining us tonight. We'll let everybody go for the night. Let us know if there's anything that we can do or if you have any questions.
Yeah, thanks again, guys. Appreciate you guys.